We are.
And that's the first thing we said here. So good morning, good afternoon, and good night, and welcome to another edition of the Home Team Podcast. My name is Matt Moriarty with the Moriarty Agency at Farmers Insurance, and I am part of a trifecta of fantastic co-hosts. First being the ultimate ninja realtor, Chandler Fendler.
Hello, everyone. Chandler Fendler here, your residential real estate residential realtor with Live Sotheby's International Realty.
And of course, the always awesome Jon Reed.
Hey, everybody. Welcome back. This is Jon Reed with New American Funding, your residential home loan consultant.
So as you can see, we're doing things a little bit differently, right? Where we are practicing social distancing, right? And we still wanted to get our content out and be able to, give you the information on everything that's going on. And so we're using a little technology here today. We're using Zoom, and we're going to publish this not only on Facebook so you can see our smiling faces, but also we are going to do just a normal podcast as well so you can listen to us as well. So if you ever wondered what we look like, now you know, right? Besides our glamour shots, right? But today we wanted to talk about, and again, in all seriousness, I know that, we are in the middle of a pandemic right now, but we wanted to bring at least a little bit of comfort to you and just give us, kind of an update on what's going on in our individual industries and just let you know kind of, how to best navigate the waters if you are looking to buy a house, insure a house, or get a loan for a house, because obviously we are experts in our industries. We like to bring on experts in other industries as well, but we wanted to update you on what's going on with kind of what we're doing. So first and foremost, Chandler, I haven't seen you in a while. How are you doing?
Hey, good. How are you doing, Matt? Good to see your
fantastic.
Cool, smiling face as well.
Yeah, thank you so much.
I wish I could give you a hug, but
we can do a virtual one, right?
It's fun. So I guess I'm the expert, for the residential realtor side.
I hope so, or we may need to get rid of you and get somebody else.
Yes, pick me. No, I can definitely speak to this subject. Our industry, so I guess let's just use the date of like mid-March, right? I think that's probably safe to say for the country, and world would be just a little bit different, but the US and here in Colorado, we can use the date of mid-March, where we saw some changes here in us with quarantine orders, stay-at-home orders, shelter in place, whatever we are calling it, coming down from our governors and our mayors of those individual cities and states that we live in and run our businesses in. So as far as real estate goes, what we were seeing before the quarantine, that was the first quarter of 2020, was actually here in Denver the strongest quarter and the highest levels of sold properties that we have seen at the lowest levels of inventory. So what does that bring you? That brings you one of the most elementary principles that we were taught when we were younger, right? We have supply and we have demand. A supply and demand, a low supply and high demand equals a healthy seller's market. So we were very, very strong coming into this quarantine, which means what we've predicted for the outlook of the quarantine, we should be good on the other side of it, as long as it doesn't last very long, right? We can ride the wave, as we call it, for probably about 3 months. And then here in Denver, then we might start to see, again, this is unprecedented, so we're not positive, but just from the data that we have been following the last month or so, we can last 3 months, and then we might see Denver maybe move into some balanced market and maybe more so of a buyer's market, but who knows? So what we have seen is we do, as realtors, our processes have changed a little bit, as John's in mortgage has, and has Matt in insurance, it's more technologically based. We follow the CDC guidelines. If we do need to go out, we wear masks, we wear gloves, we wear shoe covers, and we are always carrying either A, Clorox wipes, or B, antibacterial soap. We also limit the amount of, if you think about being a realtor, right? We go into people's homes, we touch and open for our clients every door. We touch every light switch. So we're asking that the sellers who do allow us in their homes go ahead and have those turned on and doors open for us. So that's helpful. Minimizing the touch. And we are under current orders through April 30th if there are no in-person buyer showings, but we can do those virtually, and no open houses, of course, because that is just a lot, a lot of people contact and can't do the social distancing. So that's a lot of information I just spat out, huh?
Are you finding that from a virtual standpoint, I mean, is it coming across the same way? I know that especially we've talked in the past, and sometimes when people go into a certain house, they just get that feeling, right? And they're like, this is the one now, and seeing that on like a online or showing pictures of it, or even because I don't know anything about the video portion of it. Is that still conveying that to people? Are you finding that, or is it still something that they would want to see the home?
So it's interesting. So I've always said and told my clients, because they have always wanted to filter through homes online, and we can, but I always say you cannot smell or feel a home virtually. Right. And just like you said, Matt, that's how people, whether they like to think it or not, that's how they do make decisions based on which home they buy. We are taught as of now, it'll be interesting to see how the industry does change, because so I work for Sotheby's International Realty. Our brand has the best marketing tools out there. So we've already had Matterport 3D. We've already had virtual tours. We've already had drones. We've already had video. So we've already led the industry in that type of marketing, because we believe that the more homes that we can, or the more buyers we can expose our homes and listings to, right, the more, the higher the price and the more equity the seller gets. So we've already been there, but the people aren't trained, right? So the technology's been there, but the buyers aren't trained to use that. Well, maybe they're trained to use it, but not trained to make decisions based solely upon that. Certainly not on a home, right, which is so emotional. So I have not seen a buyer purchase sight unseen yet, ever in my career. I haven't. Other realtors have. So I don't know. The stories that I have heard were buyers, right, it's like a 80-20 rule, right? 80% of the buyers might not like their home. They might like it if they buy sight unseen, and 20% may or may not be happy with it. So it'll be interesting.
So what are you doing with regards to, from a contract perspective? Like, let's say I was looking to purchase a home, and you were able to do a virtual tour, and I was like, yeah, this is the one. Are they still making offers, but is there some kind of contingency in place?
Yeah, so we can still absolutely make offers. We are an essential business. Shelter does follow under one of those necessary needs, right? Food, water, shelter. So we are essential, but we can go under contract virtually. The way that I am creating contracts, and hopefully other smart brokers are doing the same thing to protect their clients, is we put a contingency in there that says the buyer has 24 hours to walk through the home and then make a decision whether they want to continue on with the contract from there. And that does not put earnest money or any sort of promissory money at jeopardy. And it gets the buyers, right? Because under the governor's guidelines, we cannot show homes to buyers. But once we are under contract, it is a buyer walkthrough, which is legal under the governor's orders. So that is what we can do.
Very nice. And then obviously when someone puts an offer on a home, at that point, hopefully they've done this prior to this, but then they talk to someone like John, who is going to take them through the lending process, right? What changes are being made right now, or how are you seeing this affected in your profession?
Yeah, I mean, we also are extremely virtual. We have a, kind of a virtual nature to our business anymore anyways. So there hasn't been a lot of operational changes per se. Now as the process goes, we have seen changes. Obviously, it's tough for appraisers to go into homes with people not letting them in, appraisers not wanting to go into homes that they're not familiar with, being at risk of contracting the virus. So the Fannie Mae, Freddie Mac, they have had to get creative as far as that process goes. They're accepting more of the drive-by appraisals, meaning that the appraisal goes and essentially does an exterior view, pulls comps for the area, and does the valuation based off of that without actually going in and inspecting the home. We have seen an uptick in property inspection waivers as well, especially for a lot of the refinance business that we're doing. So waiving the appraisal altogether through Fannie Mae and Freddie Mac on those conventional products. Some of the issues, or not even really issues, just changes that we've seen in our industry are tightening guidelines. Lenders are trying to mitigate a lot of the risk in the market right now. And so you're seeing a lot on the government programs, the FHA programs, where a lot of lenders out there are changing your credit minimum credit score that they'll allow for a new loan. They're increasing it from the 620 standard that it's been for a while up to the 680 level. Lowering that risk, the riskier buyers that you're seeing out there, and also implementing higher reserve requirements. So money that needs to be on hand in case of a catastrophic event, losing your job, things like that, which we're seeing a lot of right now. So a lot of lenders out there are making those changes. And as far as rates go, there's a lot of the indicating factors that we look at aren't indicating where rates really should be due to the unprecedented environment that we're in.
And just to timestamp this real quick, we were talking on April 14th, 2020. Just so you can get context, we don't know when this is going to be released, but just from a context perspective, obviously things could change with any of our industries, but we just wanted to timestamp that real quick.
Yeah, absolutely. And it's really good that you do that, because especially with rates, they change every day, sometimes multiple times a day. I think they are stabilizing now comparative to where they were, say 2-3 weeks ago, where we were, see huge swings throughout the day. We would see sometimes 7 rate changes in a day. Crazy times.
That's why I got out of the business.
Yeah.
So it does make it a little challenging to quote a buyer.
Well, that's what we're all doing now, Matt. That's what we're all doing now during quarantine.
Yes, you're exactly right. But back to the indicators that we look at. We look at the mortgage-backed securities market. We look at the 10-year Treasury yield. Those are good indicators for us as a lender to what rates would be or what they will be, to try and predict when is a good time to lock in our clients. But those indicators aren't matching up right now, and it's a big factor, and that is due to the lack of liquidity in the secondary mortgage market. There's not a lot of buyers for those mortgage-backed securities. The Fed did step in. They've been buying up mortgage-backed securities at insane levels every day, which has helped to stabilize rates and the secondary market. But based off of where the mortgage-backed market is, the 10-year Treasury is, rates should be at a level that we're actually seeing it's higher than where it should be right now. And so that's conveying that to clients can be tricky. They don't quite understand it all the time, and understandably, it's not their forte. That's what we do, and getting that point across to them. So definitely some changes, unprecedented times that we're in right now. But I think that when things do level out, we'll be in a better position than what we were before this.
Oh, wow. Yeah. And that's, that's good to hear, right? Because most buyers who purchase properties, need a loan. But I'm telling all my buyers, don't let this throw off your plan. It is weeding out a lot of buyers, which the Denver market could have probably used that anyways, right? Less competition. So to certainly capitalize on, what we've been given, if you can. So it's good to hear that it's going in the right direction.
Yeah, absolutely. And Chandler, one question I have for you is based off of what the Denver market has been for a few years, really. I mean, we've been in a seller's market for quite a while. Would you say,
Yeah,
what's that?
Oh, 6 years.
Yeah, exactly.
Yeah.
Would you say that, a little bit of change, a little balancing out would be healthy?
Amazing. Yes. Oh my gosh. It is certainly what we need. And we thought we were going to see it at the end. We did see a glimpse sort of at the end of last summer. We thought that was going to be here to stay, but certainly went the other way. But yes, we all, being homeowners here in Colorado, right? It's not only our home, but in an investment. Excuse me. But we do hope for a balanced market, right? And just think about what is sustainable. Is it sustainable to increase, this much year over year? It's great, right? If you're a seller and you're planning to sell short term, but long term, it is not sustainable. And I use the like the funny example of, right, if we were to stay at this trajectory of being a seller's market for the last 6 years, excuse me, I don't have the corona, I promise. I have a frog in my throat. I use the funny example of if we were to mimic what we did in the market the last 6 years for the next, project it forward the next 6 years, we would be on the same trajectory California is. And does California really want to be California, right? No, all those Californians are cashing out on their equity and moving out of state because it's not affordable.
Yeah.
So yeah, we definitely would love to see a balance in the market. Yeah. So when people, to all those listeners out there, when you do hear the term buyer's market, it's not a bad thing. That does not mean, it is not bad at all. It does not mean properties are losing value. It just means the amount of inventory that we have to sell is increasing, which is good.
It is good.
Yeah, more to choose from.
And the interesting thing too is that the way we all do business these days, right? What this is, because you said that we'll come out in the better, right, John? And you're not just talking about from a standpoint, but I mean the way people are doing business now. I mean, look at we're doing this right now, right? Using Zoom and leveraging technology to do this. And I got to tell you, I mean, trying to get clients to come and meet with me from an insurance perspective, because it's important, right? Things change, right? Your policy that you had 5 years ago, what has changed over the last 5 years that may, that could impact if something catastrophic happened to your home, right? And most people just don't have time to do that. I have clients who live literally down the street that don't have time to come in, right? Because it takes up so much time. But having the opportunity to use technology and leverage technology is changing the way business is done. And I think that, that can be done over a phone call, right? Because most people when they're dealing with someone, the three main factors, right, of who you choose to do business with: know, like, and trust, right? Previously, over a phone call, you may not have that opportunity to have that, but to be able to conduct business this way and actually see, what someone's saying. And if your client asks you a question, and you're like, well, I don't know, there's really no way to hide it, right?
Right.
So unless you're the greatest poker player in the world, which I'm not, but just doing it that way and being able to, in an environment where we can't be together, to actually have the opportunity to use technology and actually see people, what they have going on, and be able to answer those questions and to see a friendly face.
Mm-hmm.
Oh yeah, that I think now more than ever, right? That people to people connection, we realize does carry a lot of value and is important, to people, and to understand expressions when you're talking. How many people have had a disagreement or a fight over a text message?
Oh gosh, yeah.
Because somebody said something, but they didn't mean for it to be portrayed that way, and it's so maybe we were doing, too many texts, but I think people to people always wins. And another thing that the real estate industry is doing is, now that people are quarantined in their homes and they're looking around and they're might be a little smaller than we want, things like that. We are actually doing listing consultations and conducting those virtually. So I just go on a walkthrough of the home with the client as I would in person, but virtually. And that's working out really well too, to get clients their values.
Yeah. Well, one of the things from our standpoint that we're really noticing is people, obviously with people being furloughed and maybe their benefits aren't there anymore. One of the biggest objections when we're talking to people, like if you're talking about life insurance, and I think I said this on another podcast, like everyone wants to get the heck. If you want to be alone at a party, just mention life insurance, and everyone will just leave you the heck alone, right? But now people are more apt to talk about it for a couple of reasons. First and foremost, like they do not have their policy through work, and even if they do, maybe it's something that they're not that they're not necessarily secure on if they're going to continue to have that benefit, right? And also and unfortunately, sometimes in life you don't really think about your demise. No one wants to think about that, right? Nobody wants to think about, what worst case scenario. And now I think people are starting to confront that, which is great for me, because I think it's the most important policy that we have available, just because of the fact that, the chances of your home burning down versus the breadwinner passing away, and then not being able to the person who's left behind not being able to pay for that house and not being able to live that same lifestyle that they were before, is just catastrophic. I've seen more people lose their homes because of that than I ever will, from a fire. But people want to protect their fire. It's like the goose and the golden egg, right? You want to protect the eggs or the goose, right? The goose is the person that's providing that salary. That's the most important person, is the goose, not necessarily the golden eggs that come from it. The other thing too is that with regards to, people aren't driving now, right? And thankfully a lot of insurance companies have stepped up and made sure that that you're getting a reduction in premium because of that. And it's only fair because people have enough problems, right? And unfortunately, being in the business I'm in, I get to talk to these people, and we're trying to check in with our clients and make sure everything's okay. But you're hearing these stories, right? And someone is not working anymore, or or that their whole business, and they don't know if business owners, they don't know if their business is going to be in business by the time they say ready, set, go. And it's for when you build relationships with these people, it's hard to hear these things, and it's just tremendous to be able to see the insurance companies kind of step up and make it a little bit easier. And I know that there's people have other problems, and we joke around all the time about insurance is so sexy, but really that's the last thing people really want to think about. And we want them to be able to focus on their lives and all these more important things, like than just the insurance portion. We want to protect you, but we want that to be an afterthought, except for obviously life insurance if you don't have any.
Yeah.
Well, there is no afterthought there.
Yeah.
You're just gone. No, I'm just kidding. Yeah.
That is true, but you're first on the families. That's why people always ask me, like, because there's all these different life products, right? There's a whole life, term life, all these different things. Like you never, when something catastrophic happens, the person who survives doesn't give a crap about what kind of policy it was. They just want to make sure they were covered properly and that they get the money for that. So. But yeah, that's really what's going on in our industry. We're just, trying to stay in touch with our clients as much as possible. Obviously getting a hold of people is a lot easier these days, but ultimately our goal and our mission has not changed. It's to make sure that our clients are protected properly. So, and that's what we're trying to do on a day-in, day-out basis.
Oh, did you freeze, Matt? Here, Matt, try and move.
My God? Am I still here?
You're kind of frozen.
You're kind of frozen, Matt. But you look very professional, frozen.
You look professional, yeah. There you go.
There you go. Yay!
Am I back or what? So
You're back.
You're back.
The joys of technology. You all who are listening to this podcast probably won't know exactly what happened, but when you do watch it, you get to see, a frozen. So yeah.
And that's the thing too. Oh, sorry, John.
Oh, go ahead.
Oh, well, that's the thing too, is like, technology, right, has its bloopers. You know what I mean? And everybody, now that things are moving more technology forward, we have to be willing to accept those.
Exactly. Well, and again, I mean, so, you try and leverage technology even prior to this, right? So we did a lot of videos, these two attractive people have been in my videos on several occasions. And as you know, we just go with the flow. Like, unless we totally mess up, we just keep going. Because, who cares, right? I mean, we're all normal people, right? There's nothing, that we're not going to sit up here and be like, hello, my name is, it just doesn't work that way. So be yourself. And that's what we try and preach. And that's what we try and do. So,
although if you are watching this, Matt does look like he belongs on SportsCenter. I mean, can we all agree?
He does.
So I do have the deal over here, because I have my 9-year-old and my 7-year-old are like literally like, I mean, you never know where they're going to come through, because I'm in a hallway. So I have to be prepared and stay focused. And my dog just ran by too. So
Rudy,
right? You never know when he's gonna make an appearance. So this is the way to do it.
Rudy. I forgot what I was going to say. Oh, we like to be relatable. What, Matt was saying that, bloopers happen. We just go with it. John saying we just go with it. We like to be relatable. So I am actually business on top, but I still have my Lululemon yoga pants on the bottom and my UGG slippers, just like all y'all out there do.
Very nice. Very nice.
Yeah.
Gotta admit it, right? Gotta admit it.
I got to be comfortable too.
Right. Exactly.
It's the new mom, uniform. I actually I decided to take a break from working yesterday, and I was like 45 minutes. I was like, well, I'm just going to online shop, because when we get out of quarantine, I just need to feel good about myself, whatever. So I go to lululemon.com to buy some yoga pants. They're like all bought out. It's like, currently unavailable, out of stock online. I'm like, what are all these people in the world doing right now? They are shopping for the new uniform.
There you go. That's a good stock tip right there. I probably shouldn't say that, but yeah.
Yeah, probably shouldn't say that. No, I one thing I do want to touch on real quickly, in all seriousness, is one of the mortgage buzzwords that's out there is forbearance. Forbearance. Everyone's talking about forbearance and how great it is because it allows you to skip payments. I want to caution those who are watching and those who are listening. Please speak with your mortgage expert in your area, whoever you're comfortable with, about forbearance, how it works, because it sounds great. In a lot of cases, you can skip 3 months, 90 days of payments. But when you do that, they tack it on, and it has to be, in a lot of cases, each lender is going to be different. Each lender is going to have their own policies. In a lot of cases, it has to be paid back within 6 months, the preceding 6 months after that 90 days. So as an example, if your mortgage payment is $2,000, you're skipping 90 days. That's $6,000 that has to be paid back in the next 6 months. So for the following 6 payments, your mortgage payment just went from $2,000 a month to $3,000 a month. Not a lot of people have that budgeted in, with ratios that are so close for when you bought the home, you planned on that payment. For it to go up $1,000 can be, detrimental to a lot of individuals. So I want to caution those who are listening and those who are, watching our podcast right now. Please talk to your expert in your area, whoever you feel comfortable with, about the ins and outs of forbearance, because it sounds romantic, it sounds great, but there are, catches to it.
Well, and the bottom line too, on top of that too, pay your mortgage, right? If that should be, no matter what, that should be the first thing. That's the one thing I learned in the mortgage industry. That's like, no, I'm just kidding. There's more than that, but like the mortgage is the most important thing. Like if you were to, and I'm not advising anyone to do anything, but I'm just saying, like, if you don't pay another bill, mortgage is the most important one, because it has to do with the credit score too. Like you will get dropped faster. Your credit score will just decline faster if you don't pay if you have a mortgage late than you will anything else. Is that not correct?
Yep, that is absolutely correct. You're right on there.
But pay your insurance too.
Pay all your bills if you can.
Pay all your, if you can. And just hang on, hold on tight. We will get through this. I'm super optimistic person. But the better our mental health state can stay through this, right, the better we will be on the other side. And the economy isn't going to automatically flip on one day, right? We are what keeps the economy going. So just keep that in mind too, and support, local, support the economy, and don't lead with fear is like what I'm, preaching, but we are.
Well, and again, too, I mean, we try and keep this podcast a little bit. I mean, no one wants to sit there and listen to doom and gloom. If you want to listen to doom and gloom, then there's plenty of channels on TV that are going to be going over this, right? We are three people who have a growth mindset and think positively, and we know we're going to get through this, right? It's a question. It's not a question of if, it's a question of when, right? And so, we have every single one of us here is here to support you. And give advice. And if you have any like real serious questions, we're more than happy to talk to you about those things. But obviously, we're in this to help people. That's why we put this podcast together. That's why we devote time out of our days to do this in the first place. We want to be here. We want to be here. We want to be your advocate and make sure that we can help out in any way possible.
Yeah. So you can follow me on Instagram at Chandler Findler and TikTok I think it is at Chandler Findler. I might have put a code name in TikTok though, so people would know who I was, but I'm gonna get back to that.
TikTok? What are you talking about? We'll have to talk about that in a future podcast.
I think my dog's trying to break in. Oh yes, we could talk about TikTok on a future podcast. He's like, I haven't seen my mom in a few hours. Check on her.
Well, you can also find me. I'm on Instagram at John Reed Home Loans. You can also look me up on Facebook. John C. Reed is my business page on there.
And again, my name is Matt Moriarty with Moriarty Agency Farmers Insurance. My handle is Matt_Insurers_Colorado. And you can find me on Facebook. It's the Moriarty Agency, which we'll put all this down there. But from our family, right? Because we're like family, right? Mm-hmm. From our family to yours, we just want to keep pumping away, keep the faith. We're gonna get through this, and we're here to support you. So thank you so much. We appreciate you so much for listening to our podcast. And you got to see a different side of us today. You got to actually see us, right? And
you get to see me after not having my roots done for probably going on 2 months now.
I have the same problem, so I'm just kidding.
Yeah, but this is a real vulnerable state for women. We get to know everyone's true hair color.
True.
But thank you so much, and we have a couple more episodes coming out soon. So I'm sorry for the delay. We've been busy, and we just wanted to get this out, and we take the time to get you out some more content. We promise we'll be on more of a schedule and get more content out as quickly as possible. But we appreciate you, and have a great one, and we'll talk to you soon.
Thank you.